Hi and welcome to our channel, It's Your Money. Are you ready to learn the ins and outs of options trading? Maybe you've heard friends or YouTubers boast about their success in the field and wondered if you could achieve the same financial success. The good news is you can. And that's exactly what we're here to show you. In this class, you will gain the knowledge and skills needed to become a pro in options trading. We'll be covering everything from the basics of stock options and their differences from traditional stocks, to advanced strategies for maximizing profits and minimizing risks. By the end of this class, you'll be ready to start trading options like a pro. Let's get down to business. Grab a pen and paper, get comfortable, and be ready to take some notes. You're about to dive into everything you need to know about options trading. Let's start learning. Understanding options contracts. During this video, you will gain a thorough understanding of the basic concepts of stock options and how they differ from traditional stocks. We'll also cover the different types of options, including call and put options, as well as key terminology such as strike price and expiration date. Get ready to dive into the exciting world of options trading. Paul is a determined individual who has always been working hard to improve his life. After years of saving money, he is ready to take the next step in achieving his dream of homeownership. He starts researching different options and comes across the idea of a rent-to-own agreement. The concept of renting a property with the option to purchase it at a later date appeals to him, as it allows him to live in the property while building equity. He visits his local bank and inquires about the possibility of a rent-to-own agreement, and the bank's mortgage specialist explains the process and tells him that it's a good option for someone in his situation. Excited to take the next step, Paul starts looking for properties available for rent to own, and after a few weeks of searching, he finds the perfect condo in a desirable area and within his budget. He contacts the owner and they agree to meet to discuss the terms of the rent-to-own agreement. Paul sees this as an opportunity to secure a property at a set price, and if the housing market goes up, he can sell the property and make a handsome profit. He also understands that if the housing market were to go down, he could exit the contract without paying the full price for the property. Paul and the owner sit down to sign the contract, which outlines the purchase price of the property, the length of the agreement, and the terms of the rental. Paul is excited to have found his dream home, and he starts making arrangements to move in. Comparing rental and stock options. Paul's journey of buying a home through a rent-to-own agreement is similar to the process of trading stock options. Both parties have rights and responsibilities outlined in the contract. Just like the tenant buyer, Paul is responsible for making a deposit and has the option to purchase the property at a set price in the future. He also has the option to exit the contract if he chooses not to purchase the property, but may lose money if he exits the contract before the purchase date. In the rent-to-own contract with the bank agrees to accept Paul's offer to purchase the property at a set price in the future, allowing him the opportunity to take advantage of potential market appreciation. The bank also requires Paul to make a deposit on the property as a form of commitment and security for the agreement. The bank understands that Paul may choose to exercise his option to purchase the property if the housing market goes up or stays steady. Or he may choose not to purchase the property if the housing market were to go down. In summary, Paul's hardworking attitude and his decision to enter into a rent-to-own agreement is similar to an individual who is trading stock options. Both parties have rights and obligations outlined in the contract. And just like Paul, you too have the option to purchase or exit the contract based on market evaluations. When you trade stock options, you enter into a contract to buy or sell shares of a stock at a set price on or before a specific date in the future. And to enter this contract, you will have to pay a deposit, also known as a premium in stock options. In both cases, you, the buyer, takes on a certain percentage of risk due to market fluctuations. Just like Paul, if the housing market goes down and the property decreases in value, you may choose to exit the contract and not purchase the property, but you may also have lost some of the money already paid towards the purchase price. Similarly, when trading stock options, if the stock market goes down and the stock you have an option on decreases in value, you may choose to let the option expire and not purchase the shares, but you may also have lost some of the money already paid for the option. Paul's story of buying a home through a rent-to-own agreement is similar to the process of trading stock options. Both involve entering into a contract to purchase an asset at a set price in the future, taking on a certain percentage of risk due to market fluctuations, and using leverage to control a larger asset with a smaller investment. This is the core concept of options trading, and both scenarios are based on the same principle of having the option to purchase or exit the contract based on market evaluations. Conclusion. In conclusion, trading stock options can seem intimidating at first, especially with the potential for losing your deposit if the stock you've invested in goes down. However, the potential for gains if you've picked the right stock can be significant. It's important to remember that by understanding how to research and find the winners, you can eliminate that fear. That's why we're here, to provide you with the tools and knowledge necessary to navigate the world of options trading with confidence. In our next lesson, we'll take a deep dive into options chains, learning what they are, how to read them, and how to make informed decisions. By the time you finish this series on options trading, you'll be able to confidently tackle big words like options Greeks, delta, beta, theta, and more. We've got you covered.